Hey everybody, how is it going? Welcome back to my channel. Well, it's been kind of an interesting day in the market, but I want to start off with this chart first. This was put out by Sentiment Trader. I thought it was a rather interesting article, and mainly because it, kind of contradicts what I want to do and makes me feel a little bit nervous about it. But this is just the small traders put call premium, and this is saying that small traders are getting rather nervous because they are buying a lot more put options, and now they're willing to pay up for the right to protect against a crash. So they're paying higher and higher premium. It says last week, for only the 7th time in 22 years, the smallest option traders spent 30% or more of their volume buying put options to open. Between a spike in put buying and an increase in implied volatility, the premiums that small traders paid for protection rose dramatically. Now, these traders spent $5.9 billion on premiums for put options versus only $5.2 billion on call options. And it's extremely rare for retail traders to pay more in premium for put options than for speculating on the rallies. Now, Sentiment Trader said their backtest engine shows that the S&P 500 rallied over the next year every time this occurred, and it averaged a very nice return of 21%. But there was a lot of volatility in the short term. So this is basically telling me that a lot of traders out there are thinking the same exact thing that I am. I plan on buying some put options during this next rally. Some of them are probably doing it just a little bit early. And this actually makes me kind of nervous. It seems like a very big kick-me sign for smart money to go the other way. When they get the small retail traders leaning one way, they tend to run the market the other way. So I might have to rethink that strategy. And one of the biggest news items of the day was when the Federal Reserve Chairman Jerome Powell came out and spoke with us. And one of the big highlights was he said, "We won't hesitate to go past neutral if we have to." I don't think that was big news at all. I think the market expects them to go past neutral if they want to get in front of inflation. I think the market is just kind of waiting to see what the information is as far as if it's going to send us into a recession or not. But it says, recall that the neutral rate is the point in which interest rates neither boost nor hinder economic growth. He also said, we need clear and convincing evidence that inflation is coming down before the Fed slows its pace of rate increases. And I do think that inflation is the biggest problem right now. I think if it comes between sending us into a recession or getting in front of inflation, they are going to try to get in front of inflation first before they try to protect us from a recession. But it says, by the standards of the central bank practices in recent years, we've moved about as fast as we have in several decades. As to why the Fed isn't increasing rates by more than 50 basis points per meeting, Powell pointed to the importance of communicating to the public and the markets. Now, I do think that they're probably raising at the correct amount of rates. Everybody who's screaming for 3/4 of a point, I think that's probably just getting a little bit ahead of themselves. But he says monetary policy works through expectations, pointing out that financial conditions overall have tightened significantly. So I still think that it's probably the best, course of action to just raise by 0.5 point, see how the market takes it, and then, make a decision after that. But this just shows the timestamps, and it says right now it feels like neutral rate is well above 3.6, he said. And he said that there is a risk of a persistent imbalance of supply and demand in the labor market, since this depends upon the growth in population. If you have a slower growing labor market, you're going to have a slower growing economy. I think that is a risk for the medium term, but that's for other policy makers to tackle. Now, with the policy rate where it is, we need to push ahead with rate increases. He said there are a number of plausible paths to a soft or softish landing. Nobody should doubt our resolve in bringing inflation down to the Fed's goal of 2%. For inflation to come down, though, growth has to slow, and that will make a soft landing a challenge. Now, he did say that we think we can maintain a strong labor market, and I'm not aware of a time where we had 2 job openings for every employed person. So the job market is still super, super strong. I don't think anything was really said today that people weren't expecting. I think everybody's just looking for some news about the possible recession. But all in all, the market sold off a little bit when this happened, but it got bought up right afterwards. So I really don't think there was anything significant that came out today that the market wasn't expecting. All right, so now let's jump over to the market averages and see how they are doing. We're going to start off with the QQQ, which of course is the ETF for the NASDAQ. Now we can see we're getting a nice pop above that 8-period exponential moving average today. With yesterday's price action, I actually bought some calls on the TQQQ right at the end of the day because the NASDAQ looked like it was just pegged right underneath that 8-period exponential moving average and having a sharp move up. I was kind of hoping that we were going to get a nice pop above that 8-period exponential moving average, and that is what we got. So I ended up selling some of those calls very early in the day for a little bit more than a double of what I paid for them, and I'm holding on to the rest. Hopefully we can get some follow through to the upside. But let's actually go intraday, take a look at the market, how it reacted to Powell when he came out and spoke, and that happened right about here. You can see the market initially rallied, and then the market sold off really hard. I was really tempted to get rid of the rest of my calls, but I was afraid that this might be just a little bit of a shakeout, so I held on to them, and the market just rallied. I think the Fed, number one, they didn't say much more than what was already said, and I think the market is just so oversold right now. It's just going to take a big news item in order to bring in some more sellers in the short term, in my opinion. I could be wrong. The thing could crash tomorrow, but after that initial sell-off, the market was bought up rather quickly. So I do like the way the market is looking in the short term as far as being able to go up. Let's actually go back to the daily chart. And let's actually jump over to the weekly chart. You can see after making that little hammer reversal, we are well on our way to potentially taking out the high from last week's candle. And that is going to be a very good sign. If that happens, I'm probably going to pile in a little bit harder on the long side, because that's probably just going to confirm, if we can close above it, that is, that we're probably going to have a multi-week rally at least up to this 8-period exponential moving average. All right, now when the market is doing what it is doing right now, my favorite pattern to look for is this one that is occurring right now with Coinbase. When the market has been selling off heavy, I like to look for ones that have really accelerated to the downside with that blow off volume. And if you zoom in close, I like to see a sharp bounce up and then what I like to call a floor above a floor. I don't know what anybody else calls it. That's just something that I made up. Somebody might have another name for it, but what this is telling me is that we got a sharp reaction off of the bottom and it is holding. So you want a consolidation above that reaction low, and usually when you get something like this, there is a pretty good possibility that you could be having another explosive move to the upside. Here's one sort of right here where Coinbase was selling off, accelerated to the downside, had a sharp move up, and then kind of made a little bit of a floor above a floor, and then trended up over the next 4 days. Wasn't a huge move, but you can see it went from 181 all the way up to about $219. That represented about an 18% move. So that is a decent move in the short term, and I usually like to play these with options, but Coinbase just looking absolutely beautiful. If we do get an extension of this rally in the market, I would expect Coinbase to have a nice sharp move up and at least potentially get back up tier to around $100 a share, especially if this is a multi-week rally in the overall market and the market is so oversold. Wouldn't surprise me one bit if we got something like that. But let me show you some other stocks that I found today that are making a very similar pattern. First one I want to show you is DNA. You see DNA had a sharp move down, started to kind of roll over a little bit, and then had a nice bounce up. It's making a floor above a floor. Couldn't get below this low right here over the last 3 days, and it was starting to move up. So this one wouldn't surprise me one bit if we got a move up to the 50-period simple moving average right around $3.35. That is a pretty nice move from here. Another one is happening in Palantir. Palantir looks absolutely beautiful. This thing has been rolling over quite hard. Boom, nice bounce up, and it is holding right underneath that 8-period exponential moving average, making a very tight floor right underneath that 8-period exponential moving average. So Palantir is so oversold, had some big exhaustive selling coming in, so I wouldn't be a bit surprised if this move has some continuation to the upside and fills this gap and comes up right here to this purple line, which is the 21-period exponential moving average. So that's a nice move all the way up to potentially $9.50 a share. Another one that's making that similar pattern is Snapchat. You can see this one looks like this is potentially going to move higher as well. These patterns aren't guaranteed to move, but if you are overextended in the market and one of these patterns happen, more often than not, I usually end up seeing a few of them have a big green bar once it breaks through that 8-period exponential moving average. And if you play those with options, those can pay off very well. Another one is Square. You can see Square, nice reaction move off the bottom and a tight consolidation right underneath the 8-period exponential moving average. So I think Square has a good chance of rallying if the market stays strong. Another one is Space. Virgin Galactic, looking very similar as well. A lot of these names are some of the ones that have been beaten down pretty hard. So, a little bit of a retracement to the upside is to be expected in stocks that have been beaten down pretty hard. So these are the ones I like to look for in case, the market does rally. I like to buy some call options on stocks that look like these. Another one is Nikola. You can see Nikola, whatever the hell you call him, is making a very similar pattern as well. Actually, it's getting kind of tight right here, so wouldn't be a bit surprised to see Nikola pop. Another one is ChargePoint, CHPT. I really like the way this one is looking. I wouldn't be a bit surprised if this one has a very nice pop. Also, I like the way Lyft and Uber are also looking right here. Lyft looks a little bit weaker than Uber. Let's jump over and see Uber. But really like the way Uber is looking as well. And last but not least is Ford. You can see Ford looks like this one is also ready to move up as well. But I just wanted to show you guys that pattern. Make sure you lock that pattern away and, just go back and look at some previous charts. You're going to see how often this thing tends to work out. But the caveat is it works out best when the market is way oversold. I mean, sometimes you can see these patterns start to form and, just if an individual stock is kind of bucking the trend of the market, it might not work as well. But when the entire market is oversold and you see a lot of these patterns start to form, that's when I really like to look for this pattern. But that's all I have for this video. If you guys see any decent trades setting up, make sure you leave them for me in the comment section. I would really appreciate it. Thank you so much for watching my video all the way to the end. And until next time, take care, everybody.